All right. Well, let's focus on our next company. Then we have Allcargo Logistics. The stock is in focus. It was buzzing in trade yesterday. Well, it reported the highest ever monthly volume growth for the month of July. To discuss this and more, we have Mr. Ravi Jakhar, the Chief Strategy Officer at Allcargo Logistics. Hi, Ravi. Good morning, and thanks a lot for joining in. Well, give us a couple of details then. Tell us what's the average freight rate in quarter two if I compare it to quarter one, and also what are the volumes you're building in for quarter two and for the remainder of this fiscal as well.
Yeah, so I think, last 4 quarters or a little more than a year, the global trade was in a phase of, a subdued economies in Europe, and the overall trade was down. And we had been anticipating that we'll be coming out of it with inflation easing, with interest rates likely to soften. And we are now witnessing that people are restocking the inventory. So inventory levels are moving up. And typically what happens is, when you move from 3 weeks of inventory to, say, 5 weeks of inventory, you're essentially providing a 4% sort of a growth on the overall annual volumes. Now, that's the kind of trend we are witnessing right now. And with all the disruptions, the Red Sea crisis continues. We are also finding that the supply-demand imbalances, which had happened in the last 12 months, have also been, balanced out. So we are finding that the freight rates are now more consistently in the higher range. The volumes are rebounding. As a company, both driven by this market improvement as well as our own initiatives, we have reported for the month of July 818,000 cubic meters in LCL, which is almost 5 to 6% higher than last month. It's almost same as the highest ever we reported a couple of years ago when the trade was in a very different cycle. So we are witnessing that this trend should sustain from here. And right through the remainder of the calendar year, we believe the volumes should remain strong. And the good part about this growth is this is not specific to any geography. We have found for the month across the board, be it Americas, parts of Asia, including China and Vietnam, and even European markets have seen an improvement in the LCL volumes. So that's on the LCL trade. On the FCL trade as well, we have seen almost 6% increase over the last year, same month, July to July comparison. So overall, there's a clear sense that markets have confidence that consumption would come back. People are building up inventories, whether it's in US or other parts of the world as well. There are some bright spots, call it out, Indonesia, Vietnam in Asia, India, of course. And then you have some of the Latin American countries like Brazil seeing some growth in trade. So overall, the trade was in a very subdued situation over the last 12 months. But now, since mid of June, we have seen there's a good sharp rebound in trade, and we expect the momentum to continue for the months to follow.
Ravi, if you look at some of the macro-ish data points, what you guys are doing and what many analysts have highlighted is, cost-saving measures and efficiency drives, etc., which is great news for the company. But overall, many are pointing out that we are actually now entering perhaps, after a long time, a synchronized kind of slowdown, especially in terms of global trade. You're telling us, actually, it's the opposite. You look at what's happening in Europe, you look at what's happening, fears of slowdown in the US, China is where it is. Of course, there'll be hotspots in smaller regions, but just wanted your thoughts, if you can clarify that a little bit more, especially on the container side.
Yeah, so I think, what happens is many a times the global view is more connected to the view of the Western Europe and China. And we know that supply chains have been diversifying. So China hasn't really been the bright spot for the global markets. And Europe in particular is still in a bit of a subdued demand. So, if you look at exports out of Europe in particular and some of the overall consumption, it's still low. But what's happening on a global basis, and, we kind of represent global trade with our breadth of presence across the world, we are clearly witnessing that there are good pockets of growth. And they are more than covering up for the lack of growth in Europe, for an example, compared to what it used to be 2 years ago. And of course, there's diversification. So, India, Vietnam, Indonesia, some of these countries are eating into the share of exports as compared to, what China used to do a couple of years ago. So overall, if you look at the freight rates, because they reflect the supply chain imbalances, I think if you look at just this year, we had almost 1.5 million TEUs of new ship capacity on the container shipping, which came into global trade. And despite that, we have freight rates which have continued to increase from April until about June end, and now they've kind of stabilized in a range-bound manner. And freight rates have remained high. The cargo which was being booked 1 week in advance 6 months ago now requires 2 to 3 weeks of planning at least. So there are clearly on-ground situation which is happening that there is a rebound in trade. The only caution is this rebound in trade at this point in time is also linked to the inventory rebuilding. Now, inventory rebuilding is often on the forecast and assumptions of consumption growth kicking in, and that's something which is expected. And we are seeing some green shoots, but for this growth momentum to sustain, say over 12 to 18 months or longer, it will need to come into that territory wherein interest rates continue to come down. There's more disposable income in the hands of European and the American consumers. They're in a position to increase consumption. So all of those factors will have to continue to play out. But at this point in time, they're clearly seeing elevated freight rates, and that's an indication of renewed global trade demand.
Ravi, hi, morning. It'll be really helpful if you can put some numbers to it, both on the revival in freight rates. I mean, what is the increase you've seen so far in Q2 in the last couple of months? If you could just give us some numerical indication. And also, as you're talking about volumes being buoyant for the remainder of the year, again, some rough range that we can work with. What kind of volume growth across both the segments that we can perhaps look at?
So if you could look at the long-term range, we had been talking about LCL industry globally growing at, let's say, 5 to 6%. And on the back of that, company growing double-digit. That's been the aspiration. Now, what happened in the last 12 months was industry was perhaps degrowing by 10 to 15%. And that 5 to 6% delta on the company meant that we also saw a decline of 8 to 10% from our peak numbers. Now what we are seeing that there's a bit of a growth kicking in, which means that instead of a decline, now we're in a phase of marginal growth in the industry. And with our ability to outperform the market, we are now witnessing, like I spoke about, a good 7 to 8% growth, whether you compare last year or last month. So we believe that the growth should be in the range of 2-3% for the months to follow and should gradually pick up from there as the demand sustains. And we would continue to outperform the market. And therefore, we could potentially look at growth numbers going back to where we were aspiring, say 15 to 18 months ago. That's how I would put it in a broad range.
Okay, and just a word also on the international supply chain revenues, because if I look at the trajectory over the last couple of years, that's where there's been a dip from about 17,600 crores in FY24. You were down to about 11,250 odd crores, with margins also dipping. What's the outlook on that business?
So I would say, in the international supply chain business, a large part of our cost and revenue is ocean freight, which is quite volatile. So for our business on international supply chain, one has to look at the gross profit, and that's the right parameter of evaluating how the business is performing. And as we have been sharing information on a monthly basis, that is driven by volume, utilization, and the mix of containers. And in terms of numbers, I can share that our container utilization has increased almost 10% over the last 12 months. The mix of 40 feet containers has increased about 6 to 7% as well. And the volumes are also up. So a combination of all these things should drive gross profit, upwards. And that's how, with the cost conservation that we have done over the last 6 to 9 months in particular, we should be in a position to improve the profit margin. That's been the broad strategy at play. Conserve the cost, which is in our control, and hope for the markets to revive and then outperform. And we are glad that things are starting to play out over the last couple of months now.
All right, and of course, the market's taking note of all of that as well. Thank you very much for joining us, Ravi. Good luck to you, and we'll speak again. Thank you.